Hello and welcome. I'm James Baggett, founder of Cardinal Magazine, and today we're talking to CAP HBI's Head of Valuations, Derren Martin. Good afternoon, Derren.
Good afternoon.
Can you hear us in the background? Good. Sorry, we had a little bit of a delay there. Derren, thanks ever so much for joining us at a time when I know you're incredibly busy. CAP HBI has been back to work in earnest this week when it comes to valuing cars. What's the latest picture?
Yeah, so we started moving some values again from Monday, the 11th, which we're valuing cars over 5 years old, between 5 and we're up to 20 years old, which is where the majority of the data that we've seen is. So values there, the way we work is we look at everything in isolation. So we're looking at each model range by the generation and seeing how much data there is. And if the data is there, we're moving the values. Some have gone up, very, very few have gone up in value. Most are either staying level or have gone dropped by between 2 and 5%. But obviously, these are only cars over 5 years old. But so there's a bit of a mixed picture out there. But generally, things are moving down slightly, I would say.
So what sort of volumes are you seeing this week, Derren?
So on Wednesday of this week, we had the first day where we got over 1,000 trade sales from the previous day. So previous to that, it had been, well, in the first week of lockdown, there were 1,000 records in total. The week after that, it went down to about 800. So those first 2 weeks, so we're talking the last week of March, so from the 30th and then the first week of April. Since so in this week we'll get over 5,000 though, so it's the volumes have increased. I've used the term ramped up, which it would be an exaggeration. That they're around about 10 to 12% of normal levels.
I know when we spoke last, and we wrote about it on the website, you were hoping for volumes to get up to around 15%. When do you think that's going to happen? And when are we going to be able to get a much clearer picture for you to start moving all values again?
So I think we'll probably be up to 15% next week, I would expect, but it obviously depends on what dealerships are doing with regards to, now the announcement has been made that it's going to be the 1st of June, probably, not even sure whether they will buy for that or whether they will now slow down, whether they were buying to sort of expecting to be open now, because I think there was some certainly some hope within the industry that they would be open already. If it's from the 1st of June, it will depend really on whether they are still stocking up. I think click and collect will help because that will help clear the stocks of some of the sold vehicles that they've not been able to move previously. So I would expect to be about 15% next week. I can't answer the question really on when we'll be moving everything because there's still low levels of volume in that younger late plate area. It wouldn't be fair of us to move values where we're not seeing enough data. A lot of those cars don't go through the auction sources which do have been more open than other remarketers. So we won't be moving those. I would sort of commit that we won't be moving values until we cut off them for what is June's monthly book, which is towards the end of May. We won't be moving any values under 5 years old before that.
So you think you'll start moving values for the newer cars from June onwards? Was that correct?
I would expect so. I'm not going to commit, but I would expect so. Yeah, I think volumes will be at a level where we'll be confident in moving them. Then certainly, if the showrooms do open from the 1st of June, we'll expect the market to be reopened to a certain extent. Although still, most trade sales will be online. But I think once that opens, that will open up the market more.
What's your gut feeling on what's going to happen on those newer models?
That's the $1,000,000 question, isn't it? And I certainly don't want to lead the market. What you would expect in this period of time anyway. So last year, between April and May, values dropped by sort of 5.5%. It was quite a volatile year last year. So if they dropped by around that much, it's not a huge seismic change to the market. It's what can happen during months anyway. The months after Easter tend to be months where values can drop anyway. There's more stock in the market off the plate change from March. So values can drop. Well, I'm talking trade, I'm not talking retail either. So whether the retail values drop, that's a completely different story. And at the moment, they're hardly dropping at all, and I wouldn't expect them to drop. Retailers hold their nerve. don't reduce those prices. But obviously in the trade area, when volumes increase at this time of year, values can drop. It happens most years. So if it's around the 3 to 5% that we're kind of seeing in the older ages, for newer cars as well, then I wouldn't be surprised if it's that. But I think we will be in for some volatility as well. And if there's a lot of stock that comes back into the market around that time, then you could get values dropping, but they could also recover within the space of a few days or weeks. So you could have a bit of a drop and then a bit of a recovery over a short period of time.
So at the moment, we're getting a bit of a mixed picture from a number of different sources. We reported this morning on news from Motors that they've seen 60,000. They've taken 60,000 cars advertised and seen them drop around 2%. The asking prices on retail. Auto Trader told us earlier this week that they thought they'd seen a 0.1% rise in values in April, and they think it's going to be similar for May. Your gut feeling, though, and from what you're seeing from the older cars, is that it's dropped 5%, and it could be pretty similar for the newer stuff when that starts moving as well. Is that correct?
Yeah, but 5%, I don't want to get people to get too hung up on the 5%. It could be 2, 3, 4, 5%, depending on the range, depending on the manufacturer, depending on what cars come back into the market at that time, and depending on, we've seen quite a big variation in what remarketers are selling for at the moment as well. Some are selling from around the sort of 90, early 90% of cap. Some are selling in excess of 100% of cap. Some are selling at the prices they stopped in March, and some have written down some of their stock a little bit and are accepting lower bids. So it's very, very mixed out there. On the retail side, yeah, I would agree really with Auto Trader that well, I wouldn't agree they've gone up around. They're more or less level, but I can see how they could say that they've gone up, because that can change over a period of time. I think they were talking about the month of April when they said that. So yeah, I wouldn't disagree that there's been some price changes there, but it is negligible in the retail market. And in the trade market, as I say, it isn't massively different to what you'd expect at this time of year anyway. Remember, we haven't moved a value since the end of March until this week. So there's a long period there where cars have aged. And people, we were speaking to customers out there and some were writing back their stock because we weren't valuing. So we felt we needed to start moving our values again, so that buyers and sellers of cars, if there's 1,000 cars a day being sold, which we're not getting all of the data either, so 1,000 cars a day being sold in the trade, we have a duty to be producing some values that people can buy and sell from as a guide. So.
We reported earlier this week on some research by Glasses that said they thought that prices were going to fall marginally this year and then have a big rebound next year. I say big, 1.7, 1.9%. What's your feeling on the mid to longer term picture for used cars?
It is difficult to say, and I wouldn't necessarily agree that values are going to go up next year. We kind of see it as a bit further out than that. We've done some forecasting work, and I would say that this year values will drop slightly more than we would expect. Remember, like, cars will deflate anyway, as a rule, because they're getting older in their life cycle. Next year, I think it could be that some of the cars that have not come back this year do come back next year. So it could be, I would expect that the market's not going to fully recover for maybe a little bit after that. But then, and the longer term, so if you're writing 3-year-old business now, I think it'll be okay. Looking at that type of leasing area, I think those cars will be okay and it will come back. But again, it's very mixed by sector, and we see the smaller cars performing better. I think if you're smaller petrol cars, which most of them are now, EVs potentially do okay as well, and smaller automatics, because people don't want to go on public transport. I also think, obviously, things like motorbikes, and they're in more demand because of not just for commute, but for deliveries and things like that. And again, in the van world, that could be a completely different picture as well, as more and more companies looking to do safe deliveries and that type of thing. Companies that didn't own a van previously are now looking to buy a cheaper van. I think the cheaper end of the market as well will be stronger. So if you've sadly, if you've lost your job, lost your company car, you may be looking to purchase a used vehicle. I think the smaller end will be the cheaper end may well be where you're looking there, the £8,000 to £10,000 area. I think that will be that could be quite strong.
So that could be where the most advantages for dealers are at the moment, is that at that lower end of the market?
I would think so. Yeah, yeah.
And what advice, finally, would you give dealers at the moment planning when they're getting back to work on used cars?
I think the market, you need to keep a very close eye on prices. I think you need to hold your nerve on selling. I mean, they know their businesses a lot better than I do. We're just there to sort of reflect what we're seeing in the market and reflect those prices with where they should be. But I think that if a car was good value before they were looking to buy it, there's no reason why it won't be good value now. The cars that they've bought previously, nothing dramatic has changed from that point of view. If it looked like it was a good bit of business previously, then carry on. Just be wary of the cars coming back into the market in large volumes. And I would sort of say to remarketers more than dealers to hold the nerve on that. Do not bring them back all in one go. Try and phase them as much as you can. I know that's difficult when people are trying to realise cash, but the longer you can phase vehicles out for, the stronger values will be going forward. And really for dealers to hold their nerve on price. And stick to those retail values sort of where they are. There will be some demand from consumers for cars. That's fairly well documented. I don't think that everyone's been saving up money and will go out and buy a car from this, but they will be looking to purchase cars because there has been a period of not buying them, and research shows that people are going to be worried about public transport. And as the Prime Minister said at the weekend, it was a sort of a good fillip for the car industry, really, to say not to use public transport at the moment.
Derren, thank you very much for giving up your time to talk to us today. We really appreciate it. For more interviews like this one, you can join us daily on Car Dealer Live. Log on to cardealermagazine.co.uk. Thanks very much for watching, and goodbye.